Okay traders, welcome back. So I'm going to be going over a very viral tweet. So this is something from the Price Action Labs Twitter, which by the way has been taken down. We'll be looking to get it back up shortly. My account got hacked. That's a story for another time. So a very viral tweet that I want everyone to understand. It was super viral. It got lots of questions and it can definitely transform the way you trade. So let's see what this was, right? So this tweet got me a bunch of questions, right? So trade tip. Trading GBP USD or even Euro USD is simple, right? We want to be buying below the weekly opening and we want to be selling above the weekly opening, right? Fair value gap for entry, we target liquidity, right? So we're simply trading liquidity and fair value gaps, but we're pairing this with the weekly opening price and we're pairing it with the weekly candle. This works fantastic on Euro USD and GBP USD specifically. So this is the real basics of ICT and it's probably the only ICT video you perhaps ever need to watch. So this covers things better than any other channel or video you've likely seen, right? So what is this tweet actually about? So let's look at the candle on the right over here. It's a green candle, but it could be a red candle. It's the weekly candle. And we're looking specifically at the weekly opening price. So the weekly opening price, just to add to this, the weekly opening price is 5 p.m. Eastern on a Sunday. This is when you are looking for that weekly opening price. It's the same time every day, and this is a super powerful line you can draw on your chart, which will give you insights that you've probably never even considered, and it was a game changer for myself. So why is the weekly candle so important? So every single strategy in ICT, right? Every single strategy in ICT is much better off when you trade in line with the direction of the weekly candles. This is any strategy really. So why is this? We want to be trading aggressively in line with the weekly expansion, and we only want to be taking scalp trades that contradict the weekly candle direction. That's pretty simple. So if the expansion is lower, we want to be selling, right? If the expansion is lower, we can only take scalps upwards, and we want to get out of those scalps before the market heads lower, vice versa for a bullish candle. So why is the weekly opening price important? Well, it's really simple. We want to be buying below the weekly opening price. We want to be buying when price is below the Sunday 5 p.m. Eastern open, and we want to be selling when price is above the Sunday weekly opening. It's really that simple. So let's quickly look at some schematics on the slides. A bearish candle will look something like this. We have the wick and we have the wick on the bottom and we have the body. So the high of the week will typically occur above the weekly opening. That's important to understand. The high of the week will occur above the weekly opening. So wherever the weekly opening is, again 5 p.m. Eastern Standard Time on a Sunday, we're looking for a fair value gap entry after a market structure shift above the weekly opening. Vice versa for a bullish candle, it's exactly the same thing but flipped on its head. We're looking for a opening price and we're looking to buy below the opening price. So now we're going to go over the charts and understand what we mean by this and how we can use this to our advantage on a Euro USD trade setup. So we're going to be going over a Euro USD example, right? So again, we're going to be going over a bearish example, right? So here we have a green candle. So if we now turn this into a red candle, we're going to be understanding the mechanics behind how to use the weekly opening price to your advantage. So stick with me through the rest of this video and we can understand how you can transform your trading with as little work as drawing one line. So again, if we start over here, we have the weekly candle. Now the weekly candle will have two parts to it, which I've left out. We're going to have a wick at the top and we're going to have a wick at the bottom. Now, what's important to understand is that the opening price, if I make this a little bit clearer, the opening price of the week will be somewhere around this area. So this will be the opening price somewhere. This is a little bit exaggerated, right? Let's make this a little bit like this. The opening price will be somewhere here. Now, your job as a trader is to understand the highest probability opportunities for selling will occur above this line. This is the weekly opening. So you are looking for price to do this, 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 and this. And you're simply looking to target the weekly opening down here. You want to be selling above the weekly opening. And the reason for that is because the high of the week, this is the high of the week over here in yellow. The high of the week occurs above the weekly opening, right? So the high of the week will occur above the weekly opening. And we're going to be studying how you can potentially take this potential trade opportunity or this potential trade setup. And the way you do that is by understanding a few things. We're going to be understanding a market structure shift. We're going to be understanding a fair value gap. And we're also going to be understanding where we are in relation to the weekly opening price. I'm just going to write WA for short, the weekly opening. So if we go to Euro USD over here, this is from 23rd of September to the 27th. This is the entire week. So let's replay price to about Monday, right? So this is Monday. This is the start of the week. The reason I bring your attention towards Monday is because we're going to start with the weekly opening price. So the weekly opening price is 22 o'clock UK time. That's 5 p.m. Eastern. So if we just find, this is now 5 p.m. Eastern, we want to find the weekly opening price. So go to this candle and find the opening of that candle. So this is 1.11565, right? So 1.11565. If we just go over here, we can type this in, 1.11565, 1.11565. Now this is the weekly opening, and I'm going to label this in red, and I'm going to make it a dashed line. So we are going to be using this to our advantage, right? This is the single most important concept when it comes to Forex trading, especially Euro USD and GBP USD. So if we just play price on, we're going to be understanding this, right? And always have this in your mind, this kind of schematic over here about where we are in relation to the weekly opening price, right? So if we just play price on, right? So we had, of course, a massive move to the downside, right? So what do we notice over here? So we're below the weekly opening. When you're below the weekly opening, you want to be looking for buys, right? Because the market will revert back to this weekly opening. So what have we noticed over here with price action? So price action, again, yes, we see a sweep of the previous day low, right? So this is the PDL, right? Previous day low, PDL sweep. This is a sweep of the PDL, right? This is one thing over here. Okay, so when we're in a position like this, what we essentially want to be doing is we want to be buying towards the weekly opening, right? This is not the A plus setup, but we notice how price kind of shoots up towards the weekly opening. What we want to notice over here is how price has done that. All right, so again, we have an accumulation over here with the Asian range. We have our manipulation. Notice how we swept the Asian low on Tuesday, and we've come off a fair value gap. We've mitigated a fair value gap, and from here we've headed higher. Notice how we are buying below that weekly opening. Very important to understand, right? And we often retarget that weekly opening. Now we head into Wednesday, and Wednesday is very important. So now we can see we are firmly above the weekly opening. So let's understand how Wednesday actually forms, right? So Wednesday itself was a massive kind of trade, a massive kind of move to the downside, right? So what do we take from this, right? So again, from an accumulation, manipulation, and distribution standpoint, we have the accumulation and we have a two-phase manipulation. Notice how price sweeps the Asian low, and then we sweep the Asian high, and then we have the massive move to the downside, right? So this was actually the high of the week, right? HOWT, that's the high of the week, right? So the high of the week is above this weekly opening, right? So we're constantly referring back to that weekly opening price. If we continue to play price on, we can then understand how this potential trade setup was taken. And it's all about using liquidity and fair value gaps, right? So again, one thing that's very important to understand, look at how Thursday behaved. Was Thursday a high probability trading day? The answer is no. And the reason why Thursday was a low probability trading day was because we were basically touching that weekly opening. We were oscillating at the weekly opening, and this is a low probability area to trade from. Now from here, Wednesday gave us a massive fair value gap, right? So this is the fair value gap from Wednesday. This is the inefficiency or fair value gap. So I'm going to mark that up as FVG or minus FVG, right? So let's understand price above the weekly opening, but we want to understand how price interacts at this fair value gap, right? So again, we're at a bearish fair value gap. Let's continue to play price on. This is now coming into Friday. Now Friday is super interesting, right? So we've now come into Friday, right? And the first thing we want to understand from a liquidity standpoint is that we have triple lows down here. 1, 2, 3, triple lows below the weekly opening. We also have a previous day high, and we have a fair value gap, right? So this is the previous day high over here in yellow. Let's understand how price actually behaves. Okay, very important, very good. Let's just replay price on the 5-minute. So on the 5-minute time frame, right, what we understand firstly is how price has swept the previous day high. This is the previous day high over here. Price has come in and swept it, and we've entered an area of inefficiency or fair value gap from Wednesday, right? Wednesday's massive move to the downside has given us a fair value gap. That is the first thing to understand. The second thing is we want to understand how price behaves at this particular level, right? So from here, what we've seen is we've seen a local fair value gap, right? We've seen a local fair value gap, and price has come in above the weekly opening. So in this particular region, we've seen three things that validate our entry, right? We are looking for a fair value gap entry, or an inefficiency, a local inefficiency, a 5-minute fair value gap to enter. We are above the weekly opening, and we swept a previous day high. This is another thing I talk about a lot on Twitter as well. We're above a previous day high, and an extra confluence. If you look, we've actually taken out the Asian range low first. So this is a accumulation, manipulation, distribution. So we've had a manipulation to the downside, and now we've had a manipulation to the upside. So the highest probability trades will be after a liquidity sweep, an Asian range high or a previous day high. The best trades are both. This is both, and the reason it's both is because we have an Asian range sweep and we have a previous day high sweep, and we've come into a fair value gap. So this is ticking all the boxes. So a high probability trading scenario could have been off this fair value gap over here, with a stop loss just above the high of the day over here. Now, naturally, as a trader, where do you target? Well, the first target is going to be this area, this kind of fair value gap area over here, and that is giving you a 1 to 3 R trade. So very good, especially for a forex pair, right? So if we just play price on, we eventually had our move to the downside, right? And again, price did eventually, if we just get rid of the replay mode, price did eventually fall to our intended kind of favor, right? So price did fall. So the lessons you want to take away from this is all about that weekly opening price, right? Everything reverts back to that opening price, right? So if we just go through this again, we have a red candle like this. This is our red candle. We are going to have an opening around this area. So our job as a trader is to understand that price is likely to open somewhere here. We want to be selling above the weekly opening, off and keying off a fair value gap, and we're simply looking to target an area of liquidity or a previous day low or a session low. So typically previous day lows are what I use to target personally, right? So we want to be targeting a previous day low or an Asian range low, or even a previous week low, which is another good liquidity pool, right? So we're always looking to sell above the weekly opening, and vice versa. We're looking to buy below the weekly opening. So once you understand the weekly opening, 5 p.m. Eastern time, your trading will be transformed forever.